I just finished an article on my favorite investing newsletter, which is The Motley Fool. Check that out, or don't. I'll regurgitate it for you anyways. Here's some things to know before I get back to the question posed. Is it safe to buy stocks with the S&P 500 near its record high? First, the S&P 500 currently trades at 20.4 times forward earnings estimates, a meaningful premium to the 10-year average of 17.7. Next, Warren Buffett has advised investors to be fearful when others are greedy. But Berkshire Hathaway still purchased stocks in the fourth quarter, and I'll unpack that later. Lastly, investors should look for businesses with competitive advantages and reasonable valuations in relation to their current growth prospects. The S&P 500 recently hit a record high, and the index trades at a very pricey valuation. The S&P 500 soared 24% in 2023, and investors have bid the benchmark index to multiple record highs this year already. Factors contributing that upward momentum include fading inflation, the resilient economy, a rebound in corporate earnings, and expectations that the Federal Reserve will again cut interest rates in the very near future. Fascination with artificial intelligence has also sent many stocks higher in recent months. Look at NVIDIA. However, the S&P 500 now trades at 20.4 times forward earnings estimates, a meaningful premium to the 10-year average of 17.7, which I just said. As a result, certain Wall Street analysts see a drawdown on the horizon. For instance, JP Morgan Chase has set a target of 4,200 for the S&P 500, implying about a 15% downside from this current level we're at right now. Investors wondering whether it's safe to buy stocks in the wake of the market's steep rally should consider this advice from Warren Buffett. Investors can always find buying opportunities in the market. Warren Buffett is one of the most successful investors in American history. He began buying shares of Berkshire Hathaway in 1962 and accumulated a controlling ownership stake by the year 1965. Under his leadership, Berkshire has evolved from a struggling textile mill into one of the most valuable businesses in the world, with shares compounding twice as fast as the S&P 500 over a period of more than 55 years. Buffett's patient, value-oriented investment philosophy played an important role in catalyzing that evolution. Berkshire is currently worth $880 billion, and a substantial portion of that value comes from its $370 billion stock portfolio. Buffett manages the vast majority of that total, which makes him and Berkshire an excellent case study for investors. He once wrote, "A simple rule dictates my buying. Be fearful when others are greedy, and be greedy when others are fearful." Sage advice. That widely quoted advice calls attention to a quirk of human nature. People overreact to good news and bad news. So stocks are often overvalued during bull markets and undervalued during bear markets. However, Buffett and his co-investment managers, Todd Combs and Ted Weschler, have found buying opportunities in every market environment, including the current one. They recently bought shares of SiriusXM Holdings, Occidental Petroleum, and Chevron for Berkshire's portfolio during the fourth quarter of 2023, despite the increasingly rich valuation of the S&P 500. Buffett's blueprint for success in the stock market: that Buffett buys businesses that are durable economic moats, but only when shares trade at a discount to their intrinsic value. That's very important. Buffett also picks stocks he feels comfortable holding for long periods of time. Every investor should follow that blueprint. First thing, understand the business before buying the stock. Knowledge is the cornerstone of any good investment decision. It never makes sense to buy a stock without first understanding the business. Doing so would be tantamount to gambling, and investors that treat the stock market like a casino are simply setting themselves up for trouble. The house will eventually win, just like in the casino. Second, look for businesses with a competitive advantage. Economic moats come in different shapes and sizes, but they generally amount to pricing power and cost advantages. Those qualities can arise from intellectual property, network effects, switching costs, and scale. For instance, NVIDIA and Apple have pricing power due to patented technologies. Similarly, Visa and Coca-Cola benefit from cost advantages created by the vast scope of their businesses. Consider valuation in the context of future growth. Determining the intrinsic value of the stock market is more art than science. Buffett once quoted economist John Burr Williams, and I quote, "The value of any stock, bond, or business today is determined by the cash inflows and outflows, discounted at an appropriate interest rate that can be expected to occur during the remaining life of that asset," unquote. That quote refers to the discounted cash flow, the DCF model, a mathematically complex process that values a business based on future earnings. There are DCF calculators online, but the methodology is not infallible because investors must make assumptions regarding cash flow growth and the discount rate. Also, hold good stocks for long periods of time. Investors should purchase stocks with a buy and hold mentality. To quote Buffett again, "If you aren't willing to own a stock for 10 years, don't even think about buying it and owning it for 10 minutes." Now, that doesn't mean that investors shouldn't hold a stock even after losing confidence in the business. However, the market can be irrational over short periods, because many investors trade on momentum and, of course, emotion. Time tends to weed out deviations from intrinsic value, and fundamentally sound businesses usually outperform in the long run. Here's the bottom line. The S&P 500 has moved much higher over the past year, and the index does trade at a premium to its historical valuation, meaning many stocks are probably overvalued at their current prices, and in other words, the market environment is more greedy than fearful, so investors should be cautious, but not so cautious that they miss out on opportunities. Berkshire bought stocks in the fourth quarter, so where does that tell you where their head's at? And this means that Buffett and his team were able to find what they believe are good businesses trading at a reasonable valuation. Investors who follow that blueprint have a good shot of making money in the long run. And again, hold that with the mentality that you might want to hold it for 10 years. Now, my personal conclusion to this is I think the market is very inflated. I do see opportunities out there, but I'm not chasing those. The more safe play right now is investing in precious metals and cryptocurrency. You've seen what cryptocurrency has done over the recent weeks. Bitcoin is now over $60,000. Who knows by the time you see this video where it's at, but I'm saying it's only going up. Halving is coming in April. Very big event. The miners are only getting half the rewards they used to get when they were mining their Bitcoin. Precious metals are a safe haven. When the market goes down, they will go up. Now, at this current time of publication, gold is near an all-time high as well. So despite the S&P being near a record high, so is gold. That never happens. That means there's a strong demand for gold. Central banks bought gold in near record amounts last year, and they're continuing to buy it as we fear regional banks are going to start to close. It's going to happen. Follow our channel. We talk about it all the time. So with that happening, we've got gold perched at a near high and the S&P at a near high, but we're seeing that it could come down by 15% or way even worse. I think it's going to be way worse than a 15% correction. That 4,200 that was called out earlier in this video, I think is a very modest prediction. I think we're going much lower than that. So for the short term, I'm out of the stock market. I'm holding Bitcoin, a ton of altcoins, gold, and silver. If you're looking to get gold and silver, it is the biggest safe haven asset. If we do crash, that's going to moon and go up and basically save your portfolio. Link below if you want to check that out. Greg and I have vetted some companies. Take the quiz. You'll even find out which gold company I put my IRA in. Thanks for watching. Let me know if you're investing in the S&P. I'd love to hear it in the comments below. I'm currently out, but what you do you. And again, take Warren Buffett's advice. Look to hold that 10 years. Don't buy with emotion. Buy solid companies. But right now, I think we're a little high for my blood. So I'm in the assets that I already mentioned. Catch you next time.